Good afternoon from the CME. This is Chris Robinson with your Traders Exclusive comment. Today is Wednesday, the 6th of December, first week of December. We're finally starting to get a little bit of movement in the grains. So I'm going to start with the grains and finish with the livestock. And I'll start right away with soybeans. That's been the biggest mover here. As of last night, soybeans had rallied to about a 5-month high, highest prices we've seen since last July. What drove it? Number one, you've got the funds that are slightly long, maybe 30,000 contracts. Number two really has been South American weather. So here it is, the first week of December, and we are already fixated on the weather forecast in South America. That gets updated every 12 hours. So you may see blips in the market like this. When we came in and the market reopened at 8:30 Chicago time, at about 9 o'clock, you saw the winds just the wind came right out of the sails of the bulls. We dropped about 15 cents. So it's good news, bad news. If you're a producer, it's nice to see prices up here at 5-month highs. If you're a speculator or a hedger, it can be difficult because you're always second guessing yourself. However, what we're seeing finally is a little bit of movement. We've been waiting for movement. Movement equals opportunity. And I think that that's the silver lining here. And again, what's going to be driving us? It's going to be South American weather. You flip over to corn and wheat, however, they're the laggards, right? You've got a very significant support level here. If you look at March corn has held 350, 349 for about the last 2 weeks. We tested it about 6 times. Why is that important? Well, I'll tell you why. There are a lot of producers that are sitting on corn. They're sitting on last year's corn, and now they're going to store this year's corn as well. Why? Because they don't want to sell it at these low prices. So you've got a situation where everybody's long grain. We're at a big support level. And if that support level does not hold, in other words, if we don't start to see a rally in the next 6 weeks, producers are going to have some choices to make. Is there still downside risk? Yes, there is. It all just depends on really if we continue to get decent demand. But really, we're going to be focused once again on South American weather, because in South America, they're going to plant a whole new corn crop as well, Argentina. And worldwide, everybody prices their corn off of the Chicago market. So moving forward, that 350 level in March corn, very, very significant. Now, we could get a movement here in the next 6-8 weeks higher. The market is very oversold. So the market is primed for some sort of recovery if we get any bullish news. The managed funds are still short a couple 100,000 contracts. That's a lot of contracts to move. If the market starts rallying, they're not going to sit and hold those losers. The one thing managed money does not do is they do not hold losers. That's number one rule. So if we start to get a rally, those guys would buy back those short positions. It could give producers and long speculators an opportunity. Switching over to wheat, same thing. We've got huge world wheat supplies. This morning, Stats Canada came out with really the numbers that they came out with were not that off base. Everybody sort of had already factored them in. You had lower acres in Canada with spring wheat, but you had higher yields. At the end of the day, though, that just puts pressure on prices. And you've got to also remember that the funds are short about 115,000 contracts of Chicago wheat. They're short about 20,000 contracts of Kansas City wheat. So corn and wheat are kind of sitting there together waiting for some reason to move forward. And I think that the one thing that's going to make or break us is going to be South American weather. Demand possibly could come in, but with the U.S. dollar still relatively expensive compared to where we were, 5, 6, 7 years ago, the U.S. dollar still makes our exports less attractive to end users. So those are the factors kind of all rolled up into a ball. There's some other things to talk about, but I think for December, if I'm trading grains, I'm watching South American weather forecast every 12 hours. It pops up on the internet, and you could see some opportunity there if we get some more movement in the soybeans, corn, and wheat. This is Chris Robinson. If you're looking for help with your hedging or you're speculating, give me a holler.